Hey guys, welcome to The Market is Open. Visit our website, themarketisopen.com. We have quite a bit of Tesla news to talk about today. The first thing I wanted to touch on was Morgan Stanley's take on Tesla. They have a new report that they were talking about today. And also Tesla had its shareholder meeting today, the annual shareholder meeting, and Elon Musk revealed a whole bunch of news and information about the company that I wanted to talk about. But first, please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. And also check out our t-shirts in the description below. So today we heard from Adam Jonas from Morgan Stanley. Keep in mind he was the same analyst who we were all talking about a week or 2 weeks ago, who gave that $10 price valuation to Tesla in his bear case. And I think he pretty much single-handedly brought down Tesla stock to where it was just a couple days ago. And that was kind of strange because Adam Jonas has been a bull on Tesla. He was very early on Tesla stock, and lately he has been quite bearish, though this report that came out today is a little bit more bullish than he was just a couple days ago. So now he's saying that we believe investors underappreciate or undervalue Tesla's autonomy business. And at the same time, he's saying that many investors to whom Morgan Stanley speaks to explicitly say that they don't include Tesla's autonomy business in their valuation of Tesla. So Tesla currently is about a $38 billion company as of today's price. And Adam Jonas believes that the autonomy business alone is worth about $8.5 billion of Tesla. So I think that's a little bit strange. He thinks it's worth about a fifth of the business. And what's weird is that the second quote here says that companies who they speak to are not valuing the autonomy business as part of their valuation. Yet he believes that the autonomy business is worth $8.5 billion. So is that not included in Tesla's current share price? If that's the case, Tesla's share price should be worth $8.5 billion more, according to Adam Jonas. And his price target is $230 per share. That $10 thing from last week was his bear case, and his bull case is higher. But his price target at $230 has been unchanged and was unchanged for quite some time now, even though his bear case seemed to cause the entire stock to break down over the last couple weeks. And now keep in mind, Adam Jonas is also the same person who said that he doesn't view Tesla as a growth story anymore, and he believes that it's more like a distressed credit and restructuring story. So it seems like his tune has changed quite a bit now, after a couple days. And he believes the autonomy business has some value. He's valuing it again at $8.5 billion. Now, if you look at a company like Waymo, for example, which is part of Google, Waymo was receiving valuations of about $75 billion, $175 billion. Those are pretty insane valuations for a company that doesn't appear to be as close to Tesla is to autonomous driving. I mean, Google is definitely a leader in AI and machine learning. However, they do lack the actual automobiles to test their software on, whereas Tesla does have that data. And Tesla gave that autonomy presentation a couple weeks ago, which not only confirmed the path that they were on seems to be on track, but they've also been releasing features to the public. And they've received pretty good feedback on those features already, and they're going to continue doing that, and they expect to achieve full self driving feature complete by the end of this year, whereas no other company has said that they're going to be doing that, and no other company has even specified a roadmap for or any timeline for that. A lot of companies think that self-driving is 5, 10, 20 years away, and here we have Tesla who believes that it's going to be here within the next couple of years. So to value Tesla's, whether they're right or wrong, to value Tesla's autonomy business at $8.5 billion when other companies who seem further away are getting $75 billion valuations, up to $175 billion for Waymo. Even Uber, whose business currently does not rely at all on autonomous driving, but should Uber get autonomous driving, I mean, that could be huge, and I think investors might be factoring that in a little bit into Uber's valuation, which is closer to $70 billion, which is twice the size of Tesla. And Tesla here has the potential to disrupt Uber's business, and it's only getting a small valuation for something that many investors don't even want to include in their models. So I think that's a little weird, especially given how bullish Tesla is on this segment of their future business. Now, according to Morgan Stanley, a lot of clients have been asking them about potential commercial value beyond actual Tesla vehicles, and Morgan Stanley came up with this list over here of parts of Tesla's business that they believe are underappreciated. So, I mean, let's go over a couple of these. Autonomous driving, we just talked about that. Tesla's charging station and their charging network, no other automaker has anything close to what Tesla has. No other organization even has what Tesla has, even though they are trying to build it out. Solar energy products and energy storage products still make up a smaller portion of Tesla's business, although they do have pretty big goals. They want to produce 2 gigawatt hours this year in terms of the energy storage business, and there aren't very many competitors doing that. But this does fit in very well with Tesla's vehicle business. It is the other side of the equation. Again, no other company has all of those puzzle pieces. Sale of electric vehicle batteries to other automakers. I'm not sure how much Tesla's going to be focusing on that, given that they don't even have enough batteries for themselves. The China market opportunity, I think that's one of the most undervalued parts of Tesla currently. That Gigafactory 3 has been coming up so quickly, and it has so much potential. They're going to sell every single one of those cars that they make, so that doesn't seem like it's even in the price of Tesla stock at all, or it is hugely underappreciated. The value of government electric vehicle incentives, I wouldn't rely too much on that. The upcoming semi-truck, that is probably 1.5 to 2 years away from now, so probably not a focus right now. However, all of these things combined, like it's strange how Morgan Stanley has been so bearish on Tesla stock, given all of these opportunities in the company that they're even admitting are underappreciated parts of the company that nobody is taking into consideration. So these are some pretty gigantic opportunities. They're all huge markets for Tesla, and I find it a little bit absurd that Adam Jonas from Morgan Stanley can be so seemingly bearish on the company, given all of these opportunities that the company has. Okay, so now let's switch over to Tesla's shareholder meeting, which was this evening. Elon Musk and his team gave us quite a bit of new information about the company. So let's start with the autonomy timelines. This is for self-driving. They expect to be feature complete by the end of the year. What does that actually mean? Elon says that it should be from your home to your work, but with supervision by the end of the year. So I think that's fair. I think that means that the car should be able to handle most situations, but it won't be perfect, and you might still need to intervene. According to Elon, his dev environment that he's been using in the car, he does still need to intervene from his home to his work, and he's not ready to release the product yet, but he believes it should be ready by the end of the year. And it's going to take billions of miles of testing on a huge fleet, not only to gain more data, but to be sure that it's going to be safe for the public. He also thinks that the car won't need supervision at some point next year, and then sometime thereafter, they're going to try to go for regulatory approval. And he really pushes the fact that he believes it's insane to buy a gas car right now, especially with governments setting dates on banning gas cars in the future. So that will lower the value of these cars going forward, which will increase the value of electric cars, especially a car that is upgradable to autonomous driving. All of the new hardware that is needed for autonomous driving is available on current Teslas, and the ones that don't have it but have been produced after 2016 should be able to get the free upgrade, assuming you paid for it, to hardware 3.0. Someone also asked a question about the advanced summon. So Elon says that it's almost amazing. It's not exactly where he wants it to be yet. And it is late. It was supposed to be released last year in November from a tweet that Elon wrote. There's no point of using advanced summon if it makes more sense to just walk over to your car. So it needs to be compelling for consumers. And of course, he wants to delight consumers, and he wants to make sure that they get it right. So what really is going to give Elon the confidence that it will be feature complete by the end of the year, and that they're going to be on track? Well, I think for one thing that he's currently testing it in his dev mode. But another thing is that while other car companies have very specific solutions that he calls quite brittle, that only work on one route, and if that route changes, like if there's construction or if something happens, then it completely fails. And so Tesla is going after the general solution, and although it looks like they're moving slower, they believe that they're actually quite a bit more advanced than anyone else. So anything that Tesla releases is going to be a general solution in that area of self-driving. And they're quickly closing the gap by completing many of the areas that are needed for getting the car to handle most situations. Okay, so Elon touches on his vehicle lineup. So first of all, he says that demand is not an issue for Model 3. Model 3 was the best-selling car by revenue in the US over the last 4 quarters. It was even higher than the Toyota Camry, even though the unit sales of the Camry were actually higher, but the revenue was higher for the Model 3. And in terms of the premium segment, it's beating all of the main competitors combined. So Model 3 doesn't seem to be having a problem with demand, as the media has been saying, and they're selling all of the Model 3s that they're able to produce. They actually can't produce them fast enough. In terms of the Model Y, they expect to have volume production towards the end of next year, and demand for this crossover SUV is expected to be 2.5 times that of the Model 3 demand. So that's Model S plus Model X plus Model 3. More than that is going to be the demand for Model Y. So that's going to increase the market in a big way for Tesla. Elon also mentions the pickup truck, which he seems to be pretty excited about, though he is worried that other people may not like it. But he says that when you see the pickup truck, it'll look like something straight out of a sci-fi movie. I just hope that the pickup truck is still going to be something that's easy to manufacture, and hopefully they're keeping that in mind and not pulling like a Model X, where they're going to be making it the Fabergé egg of pickup trucks, which will be very difficult to manufacture. However, they do expect to unveil it this summer. He says it's the coolest car he's seen, and it seems that basically what they did is they looked at the F-150, which is the best-selling pickup truck in the United States, and they're going to be trying to beat it in every way possible. Somebody asks a question about how much can it tow, and Elon says that if an F-150 can do it, so can the Tesla pickup. So it seems like they're going to try to beat it in every way. Next year also sounds like a pretty exciting year for production of many cars, including the semi-truck, which should be produced around that time. Again, all of these vehicles are all dependent on the scaling of battery cells. Obviously the semi-truck is going to be requiring a huge amount of battery cells per truck, and Tesla is doing their best to scale up their battery production. Even for Model Y, they're saying that the new battery production will only come online when the Model Y starts to be produced next year. So it seems like they're increasing their current capacity. They're running around 70% of their 34 gigawatt hour production facility right now, but they expect to bring that to 100%. And it seems that the Maxwell acquisition might give them some strategic leverage on how to increase the capacity of the batteries and produce more of them. But they didn't really touch too much about that. They said that they're going to leave that for later on. Someone also asked a question about, will Tesla have aquatic cars? And Elon says, like, that's a pretty good question. They actually have a design for one similar to the movie The Spy Who Loved Me. And he talked a little bit about his submarine car, but they're not going to be focusing on that right now, even though it's kind of cool, but it's just a distraction right now for Tesla's current goals of really electrifying the world right now. In terms of gigafactories, the China gigafactory seems to be on track for the end of 2019 to start production. I guess they're going for a run rate of about 150,000 Model 3s per year in their first phase target. Ultimately, he says that it should go up to about 500,000 or even 1 million cars, though that does seem a little bit optimistic given that they said that the current factory was supposed to go to 10,000 cars per week, and it has not gotten there yet. But currently in China, they're already doing a lot of the tooling. They have stamping machines, they're installing the paint shop and the battery module lines to start producing cars there. So it's coming up extremely fast, and they're super impressed on how quickly this gigantic factory has come up. In terms of other gigafactories, Elon believes that there should be at least one gigafactory on each continent. That should help in terms of deliveries. They're still trying to pick a location for the European gigafactory, and he does say something about maybe a second one in China as he's answering somebody's question, but that doesn't seem to be something that's going to happen in the near future. But the goal basically of having gigafactories all around the world is to reduce the time it takes from the raw materials to delivering the actual product to the customer. Now, there's also a bit of an update on the solar roof. So they're releasing, I guess, version 3 of the solar roof. I wouldn't say that it's really released. Versions 1 and 2 didn't really have a huge number of customers. I know Elon has one on his own house, but the product doesn't really seem to be there yet. However, they are pretty excited about version 3. It is going to be something that's lower cost, easier to install, and it seems like they have a shot at making it the cost of a shingle roof plus utility costs. So that should make it quite competitive with regular roofs, though that is still a hard problem to solve for the team, and they do seem to be laser focused on it according to what they said. But so far they have been behind schedule on this specific product. The solar roof, however, is an extremely important product for Tesla, and they are going to continue working on it and trying to achieve that goal of getting it to work in a scalable fashion. It is a big part of the equation in producing renewable energy. And Elon also says that the solar roof plus batteries should help level off the utilization of the grid, especially during peak hours. You can take electricity from the battery and put it back into the grid, and in off-peak hours, you can just take the excess power and store it into your batteries for later. So this does still seem to be a big part of a smarter grid and a more decentralized grid. They also talk about version 3 of the supercharger, which is being deployed. It's capable of charging 75 miles in 5 minutes. They are deploying more superchargers. They expect to have the entire Trans-Canada Highway. That's the highway that goes across Canada. And he brings up something that's pretty interesting, which is that two critical factors which will basically increase sales in a certain area are that there is a service center nearby within a reasonable distance and superchargers on all routes that you would ever take. So he says that if you meet those two criteria, then sales should go up in that area. So they are pushing really hard to open up more service centers and superchargers. Elon's also excited about the Tesla mobile service, which is sort of like a service center, but it's basically vans driving around to help you fix your Tesla. If your car has a problem, it'll notify the Tesla service and they'll show up and try to fix your problem. They're able to do tires and bumper repairs and minor collisions so far. It seems that they're testing new things and they're adding new capabilities for the Tesla mobile service all the time. Tesla's current service has gotten a bad rap for being pretty slow. Some people have to wait months and then have like a giant repair bill. So Tesla is moving part of it in-house, especially body repair. And just as an example, Elon Musk said that a bumper replacement, which normally could take weeks or months, was able to be fixed in about 1 hour. So it will be interesting to see how that scales. And I know Tesla has been looking for more people to apply for jobs in the mobile service space, because there does seem to be a shortage of technicians. Now, Elon Musk says that there are two very important things that investors should consider. One is the time to autonomy. Tesla has already had an autonomy investor day to help explain that, but they certainly believe that it's a big part of their business in the future going forward. The other thing to look at for Tesla that Elon says is to scale battery production. You should look at the trajectory of the amount of batteries that they're producing. So they are going to have a battery and powertrain investor day, likely later in the summer. And Elon might even talk about some of the strategic reasons why the company purchased Maxwell Technologies, which has battery technologies that should help Tesla scale faster and produce better, denser batteries. So he is going to be saving these Maxwell details for the battery and powertrain investor day presentation. The other thing that Elon says is that the company might actually get into the mining business to go, I guess, more upstream in terms of their value chain in order to secure resources, I guess, and bring the raw materials in faster. Perhaps they'll partner with the Boring Company or something in the future. He didn't really talk about that, but we'll see how they're going to be able to scale up the battery side as they produce more and more vehicles. There was also a question on Tesla insurance. Elon says it's pretty close. However, there is a small acquisition that they need to complete first. So that is news. We didn't really know about any acquisition, and we still don't know who that acquisition is. Elon also says that there is still some software to write. So perhaps they're acquiring a small insurance company, and they're going to be writing their own software to make it easy for people to sign up, perhaps while purchasing a Tesla car on their website. So there's still a lot of unknowns there, but the insurance product seems to be pretty close to being launched. Now, in terms of profitability, Elon did think about that for a second, and then he said that he expected the company to be cash flow positive. So that's probably the only thing that analysts heard, is that growth is more important than profitability. But growth is definitely very important for the company. You want to see that revenue continue to grow over time, And as long as the company can sustain itself and sort of break even and have positive cash flow, then the profitability will come later, which is the strategy that Amazon has used, despite these being two completely different companies. Now, he did say Tesla has a shot at a record production for the quarter. However, Model 3 prices are lower now than they were in Q3 because they are producing the cheaper variants of the car. So a production record doesn't necessarily mean a profit record. However, that would be huge for the company, and it would prove that there is still a large amount of demand, which Elon has confirmed that there is for the Model 3, and will help the company get to the Model Y, which should scale even better than the Model 3, and there should be much more demand for that type of vehicle. Alright, I hope you enjoyed this video. Please let me know what you thought in the comment section below. Also, please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. And don't forget to smash that like button.